Okay, we had our last Fed meeting of the year today. The Fed did exactly what we thought they were going to do. They cut the Fed funds rate by 25 basis points, but it's what they said after the meeting that really shook up the markets. So after their announcement of the 25 basis point cut, in their press conference, they determined or indicated that moving forward, they're going to be much more hawkish, meaning they are going to be less accommodative. They expect more favorable economic conditions moving forward, which that might sound good to you, but not if we're trying to get interest rates lower. Okay, so they upgraded their view on the economy. They increased their forecast for inflation and for growth, and they decreased their forecast for the unemployment rate. And so while previously we had been projecting 1% or 100 basis points in cuts in 2025, they have cut that nearly in half to 50 basis points. So if before we were thinking 4 25 basis point cuts, it's down to 2 25 basis point cuts as the current prognostication goes. The markets did not respond well. The Dow was off over 1,000 points, and bonds are similarly not in a great spot. Let me share a screen here. This is the chart of mortgage-backed security prices, which again move opposite of mortgage rates. You can see on the Fed's comments today, we got pretty well crushed. Okay, so we dropped below several strong levels of support, and now we've got some negative room to run down in price or up in yield over the next couple of weeks while we wait for other substantive data to come out. All right. What does that mean for mortgage rates? Well, mortgage rates are up nearly 0.25% in one day. Again, yesterday we were closer to 6.9. Today we're up over 7 1/8. Right? So not a good one-day move, obviously, for mortgage rates. Again, long-term, this can all change. If the data starts to shift in regards to inflation and employment as we get further into the year, as we've seen, this Fed is very willing to change their minds and have said again and again that they are data dependent. So short term, not a good day for rates. We're back into the sevens. Again, this is a battle that is really going on here as we keep going up and down this 7% line. So that's where we're at. Hopefully we'll have better news for you as we get into January, but we're looking like we're going to end the year in all likelihood in the 7% range for 30-year fixed rate mortgages. To end on a positive note, when I was in your sales meeting here a week or two ago, I shared with you how my son pointed out that Scrooge is a mortgage banker. But as I have been watching my Christmas movies here over the last week or two, I realized that you know who else is a mortgage banker? George Bailey, the good old savings and loan. And I thought I'd share this quote with you. George is talking to his dad at the beginning of the movie saying, hey, I want to do big things. I want to get out of this town. I don't want to be tied down by the savings and loan. And Pa Bailey looks at George and he says, I feel that in a small way, we're doing something important. We're satisfying a fundamental urge. It's deep in the race for a man to want his own roof and walls and fireplace. And we're helping him get those things in our shabby little office.